What's going on, guys? It's Marcel Benson, investor and entrepreneur, and I have a jam-packed video of how we were able to make 440 on Apple today. But before we jump into that video, y'all know what I need you to do. Hit the subscribe button, right? I'm on a mission to get to 1,000 subscribers. Once we get to 1,000 subscribers, we will be unlocking another series, another layer to this channel that you can benefit from and get closer to profitability, right? Y'all know I'm here always giving you the anti-gatekeeping information. So to keep this thing going, I need you guys to subscribe. All right, now that that's out the way, I want to show you exactly how we were able to scalp 440 on Apple, right? This came a little later in the day because the market opened up a little slow, right? It wasn't really moving according to a lot of the indicators and patterns like it normally does. But this is actually typical for the time of year it is, right? We have FOMC coming up. Typically when there's some sort of like CPI data or reserve data, Federal Reserve data, some sort of Fed meeting, there's, skepticism in the market because nobody wants to be caught in a weekly call or put that is going to eventually go against them. So what happens is people tend to sit on the sidelines and wait for, the Fed to come out and make an announcement and see what that initial reaction is before making a decision of where to leverage their money. So we should probably see the market pick up, in the afternoon tomorrow. May have a little bit of movement in the morning, but we definitely want to wait until, like after the Fed. But with all that said, we were able to catch one play that took a little while to develop, right? Sometimes you have to zoom out of the charts, like when the 5 minute and the 10 and 15 is not really moving and giving you exactly what you need. Sometimes you got to zoom out to the 30 and the hour to see what is ultimately forming. So I'll show you in just a second what happened with Apple, right? I'll show you the chart. I'll show you the setup. I'll show you that we use the 30-minute time frame to actually make this thing happen, okay? So I have Apple pulled up right here, and I'm going to show you exactly what we did to get profitable. So here's the Apple chart. The first hour and a half of the market, right? We got downward pressure, downward motion, 3 back-to-back bullish candles. And then we got a hammer, right? So typically when you see 3 back-to-back candles, whether it's in a bullish direction or a bearish direction, the first thing that you're looking for is like, is this getting ready to form a pullback that becomes a bull flag or a bear flag, right? So that was on my mind initially when I saw this, right? I'm like, could it possibly be forming a bear flag? And then I'm like, okay, this is a very thin hammer. This looks like it actually may be the makings of a VWAP recovery or a V-shaped recovery, right? So they're pretty much the same thing, right? The VWAP recovery is just like a close above the VWAP. The V-shaped recovery is literally just making a V. Like you have something that pushes down, reverses, and then pushes back up with no interruptions. So that's precisely what we got. And I knew that the bear flag was out of play when it actually got to the VWAP. So what I did was I was like, okay, at the reversal, I'll play it here at the reversal. I actually got here at the bottom of this second candle, right? And I played it up and I'm like, you know what? I'll stay in this and see how long it takes to get to the VWAP. If it can get to the VWAP, I can sell some, but I will also keep runners because if we get a close above the VWAP, it's going to try to go and retrace highs, right? So the first target on a reverse like this, when there's nothing but red on the other side, is to retrace to the VWAP, right? That's the first move. If it closes above the VWAP, it usually goes and retraces to highs. And as you can see here, that's exactly what it did before pulling back slightly at the end of the day before the market closed. So this is something that you can always look out for on the 30-minute. It's a very powerful setup. And I definitely recommend that when you're in markets that's not really moving as quickly as you would like for scalps, to slow things down a little bit, zoom out, and look for something that may take a little bit more time to develop. So again, the VWAP on this particular play is more than 50% of the downward move. So I knew that if it just got to the VWAP, it was more than likely going to close above the VWAP because it getting to the VWAP and closing at it already invalidates it as a bear flag because the flag pulls up more than 50% of the move. Does that make sense? I want you guys to comment below if you guys understand how that V-shaped recovery works and how the VWAP strategy works. If you have questions about that, put that in the comment as well. I'm also going to be going live tonight at 8 p.m. Eastern, right? Taking all questions that you guys have about trading, time frames, technical analysis, support, entries, anything you can think of. Make sure you bring those questions to the live tonight, and I will be getting those answered for you. I'll see you guys in the next one. Y'all know I do this every day, the daily trade breakdown, one of the trades that was successful for the day to improve your entries and your profitability. All right, I'll see you guys in the next one. Peace.